All right, in this weekend video, I want to take a look at two markets in particular, energy and gold. I've been very bullish on energy. I'm going to continue to be bullish for the next probably 6 to 8 years. However, we're getting to that stage, I think, where everybody is starting to consider or anticipate that energy is a one-way trade, that it's only going to go up. And that's what happens when you get a move like this, where it just goes up and up, and when you do get a correction, it's reversed very quickly, and just every week price is higher. Now, I don't necessarily think that oil is going to turn back down next week. It might. We've reached a resistance zone here. This particular daily cycle is getting very mature, so it could drop into a daily cycle low, little corrective move. We're kind of a long ways above this 10-week moving average. So some kind of a little corrective move, and then maybe we break through and we go to $100 before this intermediate cycle tops. But that's not really what I'm talking about. I'm talking about the potential here probably at some point this year, maybe in the summer, where this market is going to top, and then we're going to have a multi-month correction down into a 3-year cycle low. So here was our last 3-year cycle low. The next one is going to be due probably in the spring or summer of 2023, but we've got to have some time for the declining phase of the 3-year cycle. And so that's what I'm concerned with at this point. We're getting a little mature here. I'm starting to see one-way sentiment. Energy only goes up, for whatever fundamental reason people want to use. And so, again, I'm not saying that the bull market is over by any means, but I think that we could get at some point a correction that could retrace a significant portion of this move. So let me put some Fibonacci retracement levels in here for you. All right, so I'm just going to make an assumption that maybe this 3-year cycle, as I've noted before, this stretched the rubber band about as far to the downside as I've ever seen, or probably in history. So the upside is probably going to be further than any of us can currently imagine. That being said, we're going to have some big, scary corrections along the way. So let's just assume that we can get to $100 before this 3-year cycle tops. Just a very normal retracement of that 3-year cycle would take oil all the way back down to $64, $65, and that would be mild. A standard 3-year cycle low, one that's a little more scary, could take oil all the way back to $53. So that's what I'm concerned with now. It's getting late in this 3-year cycle. We're starting to see some extreme sentiment. People are beginning to believe that oil is a one-way street. And let me show you the sentiment charts. All right, here's our sentiment on oil, and you can see we've just been pegged in this extreme sentiment levels for well over a year, and you can see what happened, back here when we got extremely bullish for a long period of time. Then you have a move down into a 3-year cycle low where sentiment gets washed out, and then you build the fuel for another move up. So I'm concerned that we're getting too bullish on energy, and people are overlooking the possibility of a severe correction, and that would be a move down into a 3-year cycle low. I don't necessarily think it's ready to start today. I think there's a reasonable shot we could get to $100, maybe even as much as $120. But I think sometime this year, energy is going to top, and then we're going to have a multi-month move down into a 3-year cycle low. And I think a lot of people are going to get caught on the wrong side of that. They're going to be over leveraged because they've become convinced that energy is a one-way trade, that it only goes up. Now I want to compare that to gold. Gold, on the other hand, has just been a frustrating trade for over a year and a half now. It has just gone nowhere. We've not been able to make any higher intermediate highs. And once this rally here failed, I kind of became not terribly bearish, but not very bullish on gold. I would kind of like to see maybe a lower low, but I'm not sure we're going to get it. And there's more than one way that you can build fuel for another leg up in a bull market. You can either do it with a very scary decline that wipes out a lot of the previous gains, which I think that's probably what's going to be in store for energy here later this year. I think we're going to have a big scary pullback. You can see that this is kind of what happened. Well, this is the gold chart. Never mind. Well, I guess we could use this as an example. So this was a pullback into an 8-year cycle low, and then that was the slingshot move down that set up this big move. So I don't know that we need to do that for the gold market, because there's more than one way to create the fuel for a big move and a big leg up. You can either do it with a very scary pullback, which is, like I said, what I think is probably coming sometime this year for energy, or you can do it with just a very frustrating, sideways, untradeable market that just, is dead money month after month after month, and, impossible to trade. And eventually everybody just gives up in frustration. Not necessarily that it's, a big nasty correction that scares everybody out, and that creates the fuel for the next move up. But you can also just go sideways long enough and erratic, back and forth, untradeable long enough to where people just give up. They just become convinced that it's just not a tradable market. It's never going to move. And, in the meantime, oil or whatever it is, or stocks are going up. And so they finally just give up. It's just this pig is never going to move, and I am never going to trade this damn thing again. It is never going to be any money made in the metals. In the meantime, I'm going to move all my funds over to energy or uranium or Bitcoin or whatever it is, the momentum of the moment, and they just give up on whatever the asset is. And right now, I think that asset is metals. I think people have just given up. This thing has just gone sideways for too long. Nobody's made any money in this thing. And so and let me show you the sentiment on gold. All right, so this kind of illustrates my point. You don't have to have a big scary sell-off that just scares the crap out of everybody, and that creates the fuel for the big move. You can also just have a move that just doesn't go anywhere for too long. It's just dead money for month after month, and then you get this kind of a look on sentiment where it's not really, you're not really scared. You're just so frustrated that you just don't want to trade this thing anymore. It's dead and it's never going anywhere, and I give up, And so that's what this kind of sentiment looks like. It's not the real scary sentiment that we saw back here, or as the bear market was finishing here, where it was just pegged in the maximum fear levels for months and months on end. That's one way to create fuel for a move, but another way is just this sideways, frustrating churn that just wears you out, and then nobody wants to trade it anymore, and that creates the fuel for the move. And I think that's what's happening with gold. I don't necessarily think that we're going to have to come down and create a lot of fear for the next move up to happen. So I'm starting to get very cautious on energy, even though I don't really think it's done yet. I think we could reasonably get to $100 this year. but I'm starting to become constructive on metals here. I think we may have built enough fuel with this over a year and a half sideways churn to light the fire for the next leg up. And when we break out of this cup and handle pattern, all right, I'll widen this chart just a touch here. So we've got this huge cup, and now we're in this handle, and that's what the handle does. It wears you out until you've lost track of the big picture. You logically know the cup and handle is forming, and we're in the handle, and you know that usually the breakout from the handle is to the upside, and it can produce a huge move. But that's what the handle does. It frustrates you to the point where you've lost track of the big picture, and so you've given up, and you don't want to mess with this market anymore. So even though this is basically a textbook cup and handle pattern forming, you don't care. Right now, energy's moving, and you don't want to even consider gold and silver anymore. And you probably won't when this does break out of the handle and start to move. You will have been so frustrated that it'll probably, gold will have to go to 3,000 before you'll ever even begin to get interested again. And that's what this frustration phase does. And I think that's what's playing out. And I think there's a reasonable chance that we may be getting pretty close to the point here where this could break out to the upside. So I'm starting to become more and more cautious on energy, and more and more bullish on metals. Right now, I'm just, as long as the cartel is going to keep silver artificially suppressed, I want to buy as much physical silver as I can possibly buy and stuff into my storage vault. When I do think that we're breaking out of this handle, then I'll be more willing to trade mining stocks and ETFs like SLV and GLD. Right now, I'm just kind of mostly interested in just stocking up on physical silver, but there's going to come a time where I'm going to be interested in trading the ETFs in the metals again, and I think it may be approaching. I think we may have created enough frustration here to where we can start the breakout from the handle of this cup and handle pattern.